help me out here. Is the price of oil going down?
A lot of it depends on what happens with the economy. When I look at what the average oil price is going to be this year, I think it's going to be in the $85 to $90 range. So that's kind of in the range that we are right now, but it would mean that we average lower than we did year to date because the first quarter average was higher.
Are the oil companies a bargain here? Is Exxon, Chevron, Anadarko, are they a value?
I think some are, some aren't. You have to look at each one individually. The three you just mentioned, the one I would like the best is Chevron.
Chevron is his pick. Alex Steele, tell us why higher oil prices don't inherently mean big profits for these energy giants like Exxon and Conoco.
Rising CapEx costs. From 2005 to 2012, CapEx has actually tripled to $600 billion. And I brought along a really handy chart, if we have it, from Energy Aspects that really tells the story. Now, this is a Brent price over the last 20 years. You can see continually rising around an all-time high. Now, the second line here is net income of the big major oil companies divided by the oil price. That's going down. So for each dollar oil has risen, net income has actually fallen.
Why is that? Phil Weiss, why is that? Why have we seen that drop in income if oil keeps going up?
Because the costs are going up at the same time. We know that there's a lot of oil. We talk about a lot of oil in the U.S., but the cost of extracting that oil is much higher. It's not as cheap as it used to be.
That's the heart of the matter.
And Alex, to this point, some of the big giants like Exxon have been diversifying into natural gas instead. Has that been a smart bet?
Well, the natural gas, for the long term perhaps, but natural gas prices has come down, and Exxon in particular is about 49% gas, 51% oil, and that has hurt when you have natural gas prices down under $4.
Okay, I want to go through this right now. As oil comes down, and that's a call against what Alistair Newton says, what does it mean for the highest cost barrel? Alex Steele, what does it mean for Canada, the tar sands?
In terms of how much they can actually make? Well, when you actually work in tar sands and you have to mine the oil out of the ground, that initial investment can be about $5 million just to get about 100,000 barrels of good oil. That's a lot of cash. And even though, yes, Exxon could make net income of $9.25 billion, that's a pretty juicy number. But when you have CapEx of $41 billion for this year, plus a $20 billion annual buyback program, that gets a bit dicey.
And then you have this energy revolution happening in this country, Phil. North Dakota, Texas, Oklahoma. Who of the major energy giants is positioning themselves best for this?
Of the majors, Exxon has a nice position in the Bakken. Conoco, though, I think of the largest oil companies, probably has the best position in those places because they're in the Eagle Ford and the Bakken.
Okay, so Phil Weiss, James Mulva at Conoco set them up nicely. You mentioned Chevron as your pick. My recollection of Chevron 5 and 10 years ago is Kender on a big international expansion. Let's go to Kazakhstan. Are those days over? Are the days of the glorious international expansion done?
I don't think so. I mean, Chevron has a lot of big liquefied natural gas projects coming on Australia. We've been having a lot of finds in East Africa and the deep water, so there's still other places to go internationally.